The broadcast is now starting. All attendees are in listen-only mode.
All right, good morning, everybody. This is Disruptive Traders TV, Power 62 session for September 18th, 2019. And I am Todd Groskreutz. Hope everybody's doing good today. Let me know if you can hear me. My microphone, I got green bars, so it's looking good there. All right, let's jump into the disclaimer, get this out of the way. You should get a few people that trickle in after that as well. Risk warning and trading disclaimer, foreign trade or trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors or traders. There are no guarantees of profit, and most Forex traders lose money trading. Past performance is not indicative of future results. A high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should only invest money that you can afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts or uncertainties. This presentation and all of its content, including past trades and potential trade setups, is for educational and informational purposes only. Using any strategies, techniques, or software mentioned in this presentation is also risky. We make no guarantees of profit of any kind. The presenter is not a licensed financial professional and therefore will not give any financial advice or recommendations. All information in this presentation is our opinion and may not reflect the truth or reality in the world of trading. Please use your own good judgment and seek advice from a qualified consultant before believing, accepting, and acting upon any information in this presentation. This is not a solicitation to invest. Hypothetical performance results may have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual trading results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points in which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. All right, if you want to get a screenshot of it, now's your chance. Here is our schedule for the week. We are on Wednesday in the States. So Wednesday, we're right here. We got CT later today, Clay Taylor, Clay Waves. So Wednesday's a little bit lighter of a day, and then Thursday, Josh Grellner on Pitchforks. This session is not going to happen this week. And then we've got Stephen Ma working with EA software. If you have it and are interested, he does a great job. And then Fridays we have Mackenzie on Pitchforks. Actually, Josh Grellner is working with beginner harmonic scans, my bad. So we got Mackenzie doing pitchforks and Tony doing beginner weight biology. And then in the wee hours of the U.S. morning on Friday morning, we have Clay Taylor doing wedges with alerts. So some good sessions there. Zoe also posts them throughout the week as far as being able to follow up on any of them from a recording standpoint. So make sure you check them out. I see your comment there, Mac. This week, due to Steve having a session, what this week? Oh, Steven's not having a session. I hate the way that the lines are now. All right, so this is not going to happen this week. And this is not going to happen this week. So Thursday is going to be a little lighter. But we do have Josh Grellner with harmonic scan beginners, which is a good build off of the Charlie Delta that I do yesterday also on Tuesdays. All right. Let's see what we got here. Good morning, Matt. Somebody was intrigued last night. All right, so what do we have for questions? Power 62 session here. So anything related to 62, Steve's teachings on it. We got the HTATF. I believe it was May 3rd in the Scans, Forks, and Fibos group. He did do a little bit of 62 training earlier than that. There was a training by Clay Taylor and Tim Munsinger that kind of pulled a lot of different things together that's in Scans, Forks, and Fibos group that had some 62 reality in it. So it was really good stuff. Oh, that's a good question. A couple good questions coming in. So first question, Matt asked, which is easier on your RAS, shadow bands or the lines from HT, ATF lines in the local 62? Lately, I like the HT, ATF lines. A lot of it depends on what you're trading. The shadow bands are going to catch the other side. So if you get a move where it hasn't flipped over yet, your shadow bands will catch the back side of that. Plus, the shadow bands are more they're more real time, right? It's 5, the shadow band 5 is 5 pips from the current 62, where the HT5 is 5 pips from the 62 cross. So technically they're two different things. At times they'll have the same values depending on, if you just crossed, they're going to be the same values. But I'm a fan of the HTs just because maybe they're more linear. They're easier. I like that flat line. And I can see price moving or progressing through them and retracing, hitting them, pulling back, and then going again. I do watch them on the 30-minute quite a bit just to watch price move its way up the 30-minute ladder, you will, if price is crossed up. First target's usually, more often than not, you're going to make that HT21. A lot of times from there, you're going to pull back to the 62 again, and then you can get a good blast. Sometimes it doesn't stop at the 21, but it works its way up, and it likes to consolidate around the 34 and the 55, sometimes the 89. And you'll see that. That's in a 30-minute reality, though, 30-minute shadow bands. Or if you're running INS, 30-minute HT. If you're running INS, they're going to be the harmonic targets in the INS system, because those are the 30-minute ones. But it's personal preference, and a lot of it's getting used to it. It goes back to the post 2 weeks ago in Scans, Works, and Fibos from Steve, where find your support and resistance of choice and trade that. You don't need 29 different support and resistance systems. We want to learn one and learn it really, really, really well. Next question. EMA and or the 30. Almost the same question. So is the local 62 EMA and or the 30 time frame EMA attracted more to the shadow bands or to the HT ATF lines on the charts? Wow. So the Power 62 system, right, is the woo-woo in it is that in Steve's exhaustive research on 2,000 trend moves over 2 years across, a bunch of different pairs, none really being different than the other as far as results, is that price came back to the 62 and checked it like 2.8 times more than any other EMA. So that's why, in 62 being .618, Steve calls it the rolling Fibonacci. So price is always attracted to that 62. Sooner or later, it's going to come back to it. It just depends on how strong of a move that moves away from it, how far it moves away from it. And then, at some point it's coming back. Sometimes it'll check it, sometimes it'll blow right through it. But we know that from a reality that's going to happen. Other questions? No, Clayton, we're just getting rolling, so didn't miss too much. You did miss the disclaimer, though. I can reread it for everybody if you want. All right, other questions? Don't want this to be a real short session. As Clay noted in his session last night, these sessions are really meant to be support sessions. So as you're using this in your trading, things that you have questions on, things that you see, bring them to the sessions, write them down. I generally do just a little bit of teaching, which I'm not going to do really at all anymore. There will be some sessions, it looks like by Steve, that will be out there, be put out, which how Steve teaches, they'll be exhaustive. There'll be things you want to go back to over and over and over. So, all right, question. What other confirmation do you look for when you have a 1362 cross as a potential trade? Depends on what I'm trading. A lot of times I'm looking for the 1362 bounce, not the cross. But, as taught in Steve's training, you're looking for the 5 to cross the 13 and then the 13 to cross the 62. At that point, if you're trading a 30-minute system, his original teaching is when the 5 crosses the 13, if you're on a 30-minute, if you're within 10 pips of the 62, you can enter a close candle there. So watch that training on the 62. Steve does a good job of explaining it, better than I do. And if you search the scans, forks, and fibos, or go through it was in May that he was going over that. So look through these sessions in May. There were some sessions in June that didn't make the archive. I call them the lost sessions. When I think about it, I'm like, he covered some really good stuff, but they're lost forever. So yeah, it was in that late April, early May timeframe. So he does a great job there of explaining it. But to me, the trading the bounces when I've got a strong move, whatever time period I'm on, 30-minute, 15, 5-minute, even down to 1 minute, when price pulls back to that 62, and if it's a 5-minute one, I like to pass and check, right? So when price pulls up, let's say that's going to be our 5-minute 62. When price pulls up, this is the 1-minute 62 here. So we get this cross, right? This could be the 13 EMA of the 5-minute. The 1-minute 62 is real close value. I mentioned that last week. So it could be a yellow line in that case. We'll do price in green. Right, so as price pulls up and we cross here, price starts to open, and this is opening up, right? Which is telling us, hey, we're getting a strong move. At some point, generally not too far in, unless it's a really strong move. At some point, not too far into this move, price is going to come back and check the 5. It may go through it, but it's going to check it. And when it does, from a waveology standpoint, generally this is going to be a 5-minute retrace extreme there. Or you'll see the 5-minute, a lot of times it'll reach out. So the other waves will be going up. That 5-minute will reach out right there. And from here, generally, if you're going to get a strong move, this is a great spot to trap that, right? And if you watch your charts, you'll see it happen over and over and over. And then a lot of times, again, not always, right? Nothing's 100% in the Forex, but price will come up and out of there, and then it'll check the 1, and then off it goes. And it may be a while before it comes back to check the 1, and then it takes off again. And then sooner or later, it's coming back to the 5, right? And in all of this, the 30 is going to be floating down here, in this instance, moving its way up. Sooner or later, price is coming back to here, too. Search the group for the indicator should be the post with the training video. Yeah, the HT ATF was on May 3rd. If you search the group for HT-ATF or just ATF, you'll see the training on it. But I like the pass and check move. The original cross. Are you giving up some pips on that move depending on what time frame? Yes. But to me, that's an additional confirmation. The original cross is kind of like, yeah, we'll let that happen. Then when it comes back to check it, then there's a good chance it's going to take off. Good question. Would that move you're showing be around the fork? Yeah. Generally, there's going to be a good fork there because you made a swing, price came down, and then let's say price came down, it's moving back up, and you make that cross. Generally, this swing right here makes for a really good fork, and that 62 EMA, as we mentioned in the past, and they talk about in the Pitchfork courses or trainings, is you want that EMA running through your fork, ideally. Because you know that price is going to come back to the 62, And so, you're trying to double that EMA and the fork bounce at the same time. To me, 5-minute EMA, 62 with a 5-minute fork, great size, great moves. They're frequent enough that you get to see them happen in just, in any session. So, but it's trader's choice. The neat thing with the EMAs is kind of like a pitchfork is they're real time, right? You can go back in history, pick your time frame, put it on the chart, and see how price interacted with it. And it's no, you don't have repaint issues like you might have with an indicator. I don't really look at bump and pass on a 62 because to me it's showing when price is on one side of it, that's the trend in that time frame, and I want it to cross over and then take off after that if it's going to quote unquote turn over. Your 13 is kind of the screener, if you will. I was looking at this. I had some higher time frames on it as well. But you can see here how we crossed right here. Let's get weight. We crossed right here. Price pulled up, comes back just a little shy. But 30-minute harmonic wave convergence, 240s all the way up here. I mean, like, I lie awake in bed at night thinking about that. From here, it takes off. I mean, this is 21 to 72, so it's 51 pip run there in a fairly direct manner. Now here, price goes below, right? If you're all FOMO'd up, we're coming back to the 34, but like, it's going to come down and then take off. But we look, the 13's way up here. So until the 13 is crossed, I'm not looking at that. The 13, you want the 13 to cross to say, hey, that move is coming across. Kind of made a nice little M there as well. So it's on time period. If you study it enough, and again, in Steve's video, he goes over more theory behind it. He goes over more theory on how to trade it. Good session to watch. And sometimes it's not, there was news in here, right? So filter that out. The beauty of, on a longer time frame, the beauty of harmonic wave convergence is that it helps us get in this move right here. Where when they originally traded the Power 62 system, they were looking to enter here and or here. And then if they didn't get in, they didn't really trade it. And then, it's a 8-hour move, right? So they, it might be 3, 4, 5 days before this thing turns around. So they don't even get in it at that point. They're looking at a different pair. Other questions? How far is too far for price on the 62 to factor it in as a possible setup? So like if it's pulled away from the 62, and so you're saying price is 40 pips away from the 62, so you're not even looking at it at that point with a 1362. So it's going to depend on time frame, right? And there are other realities when on a 30-minute chart, price goes out past the 34, then comes back to the 21. We know there's an 87% chance price is going to go to the 62 at that point. When it gets inside the 10, that chance is even higher. Obviously, it's cut half the distance already. So there are realities in trading it back to the 62, but generally at a higher time frame. Otherwise, I'm always looking, when I'm looking at the market, you try to make it easy, right? You try to make it repetitive because the market does a lot of different things. So if that's your 15-minute EMA, and this is the 13 EMA or the 15-minute, and I've mentioned this before, when price is in here, I'm ignoring that. Now, are there ways to trade this? You know, it's a consolidation there. Yes, it's going to break out sooner or later. We know that, right? But it's a matter of what you're trading. Something like that based on the 15. So we have this cross. Now you have my attention. But we had a cross here, right? And you had my attention. But then it didn't really go anywhere. It came right back. What I'm looking for is this. When that starts to happen, then you've got something. And I actually prefer, I like when price, when price crosses and comes right back and checks. And to me, it hasn't really told me anything yet. It hasn't done this, right? I should like when it goes further out and then come back and check because I know there's a stronger trend when it comes up here and then it comes back. And I can see this separation. The 13 has a lot to do with the strength of what's going on. And so it's just a matter of focusing and ruling out. And once you do it, it's easy on your RAS, right? Because you're like, hey, I don't even need to look at that. And by the time we get here, your 15-minute wave is going to be extreme. You know, it's worked its way up, and it's pretty much like that if you're in this type of move. So then you're looking at pullbacks against that 15-minute extreme, more or less. So if price comes back to it, and the 15 minutes probably if you're on a 15-minute chart, 15 minutes going to be retraced. Higher time frame should be extreme at that point, 30-minute, 1 hour. I like my waves to be fairly extreme because I know where the intention of the waves is. Nothing worse than a 15-minute in the middle of the channel and you're looking to trade it. We trade harmonic wave convergence for a reason. And we want to be on the positive side, on the upside of the impulsivity, as Spencer points out. Good question, though. So I'm looking for that spread. I'm not looking for when it's just kind of bopping around. You know, on this 30-minute chart, right? When you start seeing this, then you know, hey, and look at what the waves are doing. 30-minute was extreme, 4 hours moving up. I don't usually have the 480 and the daily on my chart. Just looking at a couple things this morning. Then you know you're getting strong. If you have the patience, 30-minute chart, right? So it's not going to happen as often. If you have the patience to wait for it to come back to here and there, that's you filtered out all this noise, right? If somebody would say, oh yeah, there's a trade right here, 20 pip move. Not my trade. I'm good. I'll take extreme at the 62. Can go through just a little bit, but not much. And if the 13's getting right tight there, then there's no trade for me, because the 13 could cross over. So again, trader's choice. So it's fractal, right? Steve would always say, what happens on one chart is going to happen on another. It crossed. Didn't quite cross, actually. We're kind of flat in here, but started pulling back up. We look here, hit the 5. I don't like that color. Hit the 5 again. Now 30 minutes extreme, right? Makes a nice strong pull up. Comes back. 1 minute's extreme. Pulls through here a little bit to hit this SCS line, but we look here, 1 minute extreme, 10 minutes extreme, 30 minutes extreme. Happens over and over. And this is even in a not good time of day to be, you want, if you're going to go down to 1 minute, you got to make sure you have channels also. You can't be trading it in a flat market. You're not going to get anywhere here. But it's just an example of it doing the same thing over and over. Fairly strong move, not overly strong. But we see when it pulls down towards the 5, I like to see it retrace all the way to the 5. But you're looking at these bottoms here. Here's one where it retraced all the way. See how it pulled back to the 5, but the 13's still way out here. The reason is that it did it in like 2 candles, but we still have some separation there. All right, let's see what we got here. So question is on the HTATF. This is a 5-minute chart, so it automatically puts us a purple 62, magenta, whatever you want to call it. And then the 13 EMA on local time period is always yellow. So you'll notice when I was on the 1 minute, the 1 minute's white, the 13 EMA is yellow. On the 30 minute, 30 minutes blue, but the 13 EMA is yellow. And the 15 minute is the orange color. So it's consistent with the color scheme that we use throughout our charts. But the 62 is always the color of the time period you're on. And for 10 minute, it would be yellow. which it's yellow and yellow. 10-minute gets kind of tricky that way. But who would trade the 10-minute? Just kidding. All right, any other questions? Good questions today so far. If we don't have any other questions, we'll wrap it up for the day. A little bit shorter than usual, but a couple new people in here too. Good to see. People I've seen in the groups, but not on the session usually. So, and we do a recording on them, so you have a chance of catching them after the fact. Here is the disclaimer one last time. Put that up the top. What's the maximum EMAs you have on one time frame? I'll run 3 at times, the 15, or 4 actually. The 30 is always on my chart, so you don't even think of it, but 30, 15, 5, and 1. It just gives you, it can give you a good representation of price, how it's moving and how they're all spreading out. But as price starts to turn over, the 1's going to be the first one because it's shorter time frame, obviously, that starts coming back into the other ones. But really, if you just run the 1 per time frame and you're running 3 up, 35 1, 30 10 1, whatever you're running, 30 15 1, how price interacts relative to that 62, you're going to be able to tell if it's making a strong move or not. So you try not to overcomplicate it. The reason for running like a 15 5 1 is if price pulls back towards the 5, you want to see, hey, is it going to hit a 10-minute EMA, a 15 EMA, or is it going to the 30? So because it will bounce off those other ones. So it's more of a support and resistance line at that point, but not something, sometimes I'll toggle it on and off. On my 5-minute chart, I usually have the 10 and the 15, but they're turned off. So if price pulls back past that 5, I might flip the 10 on or the 15 on, see if it's going to bounce off of that. Good question, though. All right, with that, we'll wrap it up for the day. Enjoy the rest of your week. It's Wednesday, U.S. We do have Fed funds rate today, so keep that in mind in your trading. And we will see you next week. Thanks, everybody. Thanks, Glenn.